Hi, Assalamualaikum to Dr. Roslina and all my friends. My name is Muhammad Nur Aziz Ibn and my group members are Nabila binti Jumri, Nur Fazana binti Muhammad Ali and Nurul Fitri Hazira binti Hadis will present about the IRIS and the Islamic dream. So, what is the RIS and the IRIS? REIT is a real estate collective investment scheme that combines the greatest feature of both real estate and the trust fund. Meanwhile, IRIS is the real estate collective investment scheme in which the tenant engage in the Sharia compliant.
Hi, Assalamualaikum. My name is Nur Fazana binti Muhammad Ali. Next is the development of IREITs. Malaysia is the first jurisdiction in the global financial sector to issue IREITs guideline in 2005. It also set the global benchmark for the development of IREITs. The first IREITs in the world is Al-Aqar REIT, which being listed on Bursa Malaysia on August 2006. The second one is Al-Hadarah Boosted REITs, which developed in 2007, followed by Aziz REITs in 2008. It is the third Islamic REITs that established in Malaysia. Meanwhile, in 2013, Malaysia managed to be the world's first Sharia compliant staple REITs.
Type of IRIS divided into four. Firstly is the equity risk, commonly traded in securities market. Involve wide range of activities in develop, lease, building management and the tenant service, and is aimed at building or real estate and maintaining to generate income. Second is the hybrid risk. It is combination of equity and the mortgage risk. It is moderate return and own and operate real estate while extend loans to owner and operator. Next is the mortgage risk. It provides a long-term and a short-term mortgage, tend to be more volatile since it influenced by movement in interest rate. But however, the structure is free from prohibited element. And the lastly is the staple risk. Include two or more separate entities stapled together to trade using a single new financial instrument, like example KLCC instrument. Next is the future of IREIT. First, non-permissible rental activities. In this context, because the rental is the investor's primary source of revenue, the rental activities must be halal and free of riba, gambling and other prohibited activities. Second, a rental from a tenant who engage in a variety of activities. In the case of a tenant whose basic activities are permissible under Sharia, but whose other activities may contain a prohibited feature, as a result, it is necessary for the Sharia advisor to conduct an appraisal with the external caution. Third, method for calculating the ratio of non-permissible rental activities. Some acceptable ways such as space occupied, hour of service and other appropriate techniques established by the ijtihad of the Sharia advisor can be utilized to calculate the ratio of non-permissible activities rental to a total rental paid by a tenant. For a real estate acquisition, it is illegal to buy real estate where all the tenant engage in illegal activities. 5. Renting out to a new tenant. The Islamic REIT fund management cannot allow a new tenant to participate in activities that are considered forbidden. 6. Investment, deposit and finance for IRIS are both handled by this instrument. Also of investment, deposit and financing instrument is an Islamic REIT should adhere to Sharia norm. 7. Takaful coverage. Islamic REIT are required to use takaful plan to ensure their asset in this condition. And the lastly is the risk management. For risk management purpose, Islamic REITs permitted to participate in forward sale of currency purchases and are encouraged to interact with Islamic financial institutions. For the structure of IRIS are structured in such a way that investor can invest in them by holding unit. Second, as part of its asset pool, IRIS acquire a real estate. Third, manager will manage and administer of IRIS. Next, the trustee function as the fund's custodian. After that, Sharia committee advise on matter regarded to the Sharia. The property manager will provide maintenance and the management services of the real estate. And the lastly is the tenant rent the real estate.
Next, we will discuss about the comparison between Islamic REITs and conventional REITs. Firstly, income from real estate and other assets. In Islamic REITs, it is restricted to Sharia compliant, usage of real estate assets and investment in other assets, such as sukuk. In conventional REITs, there is no restriction as anything is legal. Second, business activities allowed. In Islamic REITs, it is restricted to Sharia compliant usage of real estate assets. In conventional REITs, there is no restriction as anything is legal, such as gambling and casino. Third, appointment of Sharia advisor. In Islamic REITs, it should assign Sharia advisor to conformity with Sharia condition while conventional REITs, there is no necessity to appoint Sharia advisor. Lastly, insurance for properties. In Islamic REITs, managers should concern and ensure about the availability of Islamic insurance before involved in conventional insurance, while conventional REITs, the conventional insurance with insurance companies as permitted by trustee. Lastly, the advantages and disadvantages of IREITs. The first advantage of IREITs is mixed portfolio of assets. Investors are able to diversify their risk profile by participating a range of real estate and real estate related assets. Second, high dividend distribution to unit holders. To qualify for tax transparency status, IREITs is required to distribute 90% or more of its total income to unit holders. Third, inflation hedge. The value of real estate is expected to generally increase with inflation rate. Next, stable returns. Physically able to generate a sustainable income through rental income and capital appreciation, which can be used to continually pay dividend. Lastly, affordability. It allows investors to participate to real estate market with a smaller capital outlay as compared to the outright purchase of real estate. For the disadvantages, first, returns are not guaranteed. The total return of IREITs is subject to the performance of the property market. Therefore, unit price may decrease if its underlying properties drop in value. Secondly, loss of control over investment. Investors will not have direct control over the management company's investment decisions. For example, buying or selling certain real estate or how to manage it. Lastly, market factors. It is subject to the vagaries of market demand and supply. Market fluctuations and changes in the interest rates may affect the real estate's price.
Hi, Assalamualaikum. My name is Nurul Fitri Hazra binti Hadis, and now I will explain about the Islamic derivative. First of all, we need to know what is a derivative. A derivative is a contract between two parties which derive its value or price from an underlying asset. This contract can be used to trade any number of assets and carry their own risk. While Islamic derivative is a new structure in Islamic finance as it seeks to generate similar economic profit to comparable conventional derivative instruments, even though through a Sharia-compliant structures. According to Islamic Financial Service Act 2013, Islamic derivative means any agreement, including an option, swap, future, or forward contract made accordance with Sharia. From the definition, it means the structure must be approved and Sharia compliant, while the underlying asset must be permissible item. Islamic derivative offered to counterparties by Islamic bank for risk management and hedging purpose only. Usually, it is used to hedge against fluctuation in foreign exchange in the currency, market and commodity price. So one of the Islamic derivative type is Islamic profit rate swap, known as IPRS. IPRS, a bilateral agreement between parties to make a regular payment to each other at a great interval. It is used to hedge against adverse or unfavorable profit rate movement. A commodity transaction is used at each settlement date. For structure, the fixed rate is determined at the start of the contract and remains the same until the end of the tenure and agreed reset date. The floating rate is referenced to an index and is determined at every settlement date. There are a few objectives of IPRS. Firstly, is to match funding rates with return rates from investment. Secondly, to achieve lower cost of funding. Next is to restructure existing debt profile without raising new finance or alternating the structure of the balance sheet. And lastly is to manage exposure to interest rate movement as Islamic financial institutions still compete with conventional banks for market space. Islamic derivative consists of Arbun, Wa'ad, Salam contract and Istisna contract. Arbun contract is a down payment which is a non-refundable deposit paid by the buyer to the seller upon the concluding of sale with the provision that contract will be completed during the prescribed period. While Wa'ad contract is a promise which connotes an expression of willingness of a person or a group of a person on a particular subject matter. Salam contract, which is an advance payment, is made for goods to be delivered at a future date. Profit and loss sharing suggests an equitable sharing of risk and profits between the parties involved in a financial transaction. And for the last one, is this not contract is referred to a contract for the acquisition of goods by specification where the price is paid at the time of contract or paid gradually in accordance with the progress of a completion of a job.
Hai, Assalamualaikum. My name is Nabila binti Jumri. There are two principles under IPRS. The first principle is commodity murabaha. It can be defined an agreement whereby a counterparty purchase Sharia permissible commodity from supplier at cost price and sell the commodity to another party at markup price. Then the second principle available in IPRS is an agreement where parties will be independently provide unilateral undertaking to enter a series of multiple commodity murabaha according to specified agreement between the parties. Then this agreement known as what?
Move to the differences between Islamic profit rate swap and interest rate swap. For Islamic profit rate swap, the first one is under a profit rate swap, two parties agree to exchange periodic, fixed, and floating payments by multiplying a pre-agreed notional amount by the applicable fixed and floating rates agreed by the parties. The second one, it is an Islamic finance arrangement which is similar to an interest rate swap, but its structure must be according to Sharia compliant. And the third, the resulting amounts are then paid by the parties to one another. This exchange is effected using a murabaha contract to generate the fixed rate payments and a reverse murabaha or tawaruk contract to generate the floating rate payments. Next, interest rate swap. Under interest rate swap, the parties agree to exchange periodic fixed and floating payments by reference to a pre-agreed notional amount. And then as with many conventional derivatives products, a conventional interest rate swap is problematic from a Sharia perspective as it potentially contravenes three key Sharia prohibitions, which is the prohibitions on riba, gara, and maisir. This kind of swap linked to one party, typically called the fixed rate payer, pays a fee that usually quarterly to the other party, which known as floating rate payer. It is pays to the fixed rate payer a variable amount that is usually the product of LIBOR or another benchmark rate plus the transaction's notional amount. We move to the IPRS structure, which it can be presented through an illustration. There are two stages for make it work, which are through fixed profit rate and floating profit rate. We are going to use Maybank as example for the Islamic financial institution. Let's go through the first stage, which is fixed profit rate. First thing first, Maybank will sell asset to Islamic swap counterparty at notional principal, let's say 500,000 ringgit. And after that, Islamic swap counterparty will sell back the asset to Maybank at notional principal 500,000 ringgit plus markup based on fixed profit rate. Then, notional principal amount of 500,000 ringgit owed by both Maybank and Islamic swap counterparty to each other is set off. Instead, both of the party enter the agreement. Next, Maybank paid to Islamic swap counterparty the agreed interval payment debt for 6 months according to agreed fixed profit rate. Move to the stage 2, floating profit rate. For this stage, Maybank will sell asset to Islamic swap counterparty at notional principal, let's say 500,000 ringgit plus floating profit rate. After that, Islamic swap counterparty will sell back the asset to Maybank at notional principal 500,000 ringgit plus markup based on fixed profit rate. Then notional principal amount of 500,000 ringgit owed by both Maybank and Islamic swap counterparty to each other is set off. Means that both of the party enter the agreement. Then Maybank paid to Islamic swap counterparty the agreed interval payment debt for 6 months according to agreed fixed profit rate. The floating rate is repeated for every 6 months until maturity.